Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on our show today. I guess we're coming near the end of the earnings season here. We got a number of companies reporting after the close yesterday, but I think about 10% of the S&P 500 has yet to report. So we're almost through the end here of the Q3 earnings season. Talk about that. Talk about some notable ratings we had as well. Our guest today, Bill Baruch, the president of Blue Line Futures. He will join us at 8:35. In the meantime, Joel, what's the word here overnight? It must be something good.
It's choppy. It's a real choppy session here. Nice 14-point range, spiked up to 90.50. I think that maybe on some China news. That was overnight, so that's your pre-market high. I don't have anything up there for you, folks. Yesterday's high and your all-time high, 30.97. Looks like that may hold up today the way we're trading as we speak. Pre-market low, 76.75. Not much down there either. Thursday's interday low right in that area, 78.75. So that's your support for now. Thursday, the real low from Thursday, another good support point would be 70.25. Crude, man, this thing is just up and down around 57. Now we're below 57, down 75 cents at 56.40. Gold, now we're moving away from 1,500, down 610 at 14.80.40. We have silver in the red here, now under $17, down 24 cents to 16.77. And Bitcoin holding on to 9,000 by the hair of its chinny chin chin, down $2.10 at 9,010. Triple D, you must have traded, I would say, no less than 10,000 shares of BKNG last night.
That would have been fun, eh? You know what? You just got, when a company disappoints, you want to be the second company to report because Expedia set the bar so low. I thought about this with Booking. Booking was down 150 points in sympathy with the Expedia move. I thought about taking BKNG long because I was like, if they say anything even remotely okay, the stock is bound to rally. Well, here it is. Expedia gets absolutely destroyed yesterday, and I mean that was the loser of the day. And we had some pretty good losers with Roku, obviously, yesterday, but Expedia trumped them all. TripAdvisor was down significantly on its earnings as well. And then Booking hadn't even said anything yet, but we just hit that down 150 points just because. And you see it this morning, BKNG bouncing back. Spencer, the report must have been okay.
It was okay, and if you're not sure, just wait and see what the analysts do the following morning. So Booking yesterday, Q3 EPS, they beat $45.36. Man, they got to do a split or something. $45.
They like the high price. They're trying to go after Warren Buffett.
Yeah, that's what they made. They're expected to make $44.57, so EPS beat. Sales was a slight miss, but if you weren't sure whether it was good or not, analysts this morning are coming in and raising their price targets. Stifel raising theirs, UBS raising theirs. So good report.
Stock trading up significantly, so getting back pretty much all of its losses from yesterday. With that being said, if you were long this thing and you just watched 150 points go away, overnight or the yesterday because of Expedia earnings, and now you're getting back 100 points of that, say 90 points of it, would you not be a little bit inclined to maybe lighten up?
Of course. But this thing can go absolutely anywhere. Let's see. We're trading at 1938 and big old bar. You had a big old spike on that one. And I'll give you your pre-market high. Pre-market high comes in at 1973.70. That's quite a ways up here, but I'm only going to give one number in this one because I'm terrible with $2,000 stocks. I'll just look at yesterday's high. Yesterday's high comes in at 1946 or 1945.22. you get above that, then you work into that gap area. Coming on the downside here, I don't know. It's been really quiet as of late, and let's see what's been holding here. 1308 looks like to be a minor support point, but let's see. What this stock needs to do is it needs to get back over yesterday's high and get into that gap and do some work on the upside there.
Jump back over to the earnings parade and let's go to the House of Mouse. We've got to give it the love because this is a good quarter. Happy in the long-term portfolio here this morning. It's good for my long-term portfolio, obviously. Up 6%. What'd they say, Spencer? I think they said everything right, sounds like.
They liked it. The EPS beat $1.07 versus a 95-cent estimate. Sales was a slight miss, but essentially in line there. 19.1 versus $19.19 billion. So essentially in line on that number. As far as the individual segments are concerned, let's see, media networks revenue is up 22% year over year. Parks and experiences up 8% year over year. Studio entertainment up 52% year over year. And direct to consumer and international up 316% year over year. A lot of that, of course, having to do with the acquisition of Fox, but here we are nonetheless. Disney is rolling.
What'd they say about the Disney Plus?
It's ready to go. Launching next week. They announced a distribution deal with Amazon and the Fire TV, kind of giving the middle finger there to Netflix. But it's ready to go.
I have no idea. Obviously, I hold this in my long-term account. I'm sticking with that, but I really have no idea, what to do at this point in time. Not with the long-term shares, but if I was in it for a trade, because you're kind of in the middle of nowhere here. I mean, you've had a nice rally. Do I want to buy it up 8 points? No, I hate chasing stuff. And then you look at the high at 147.15. You're like, well, you're still $6 away from there, so there's not that much to lean on here either. So you know what? I'm just there's no trade in here. I don't see a trade in here. I don't see a setup.
I do.
Give it to me.
If I was long, which I'm not, I like to see what happens at 142. Haven't hit it yet in the pre-market trading, 41.35, trading right at the highs of the session. The reason I say that is there's a pair of highs there from August 2nd and August 6th, 41.95, 42.22. So you get through there, maybe you're looking at the 144 handle, but boy, oh boy, 142 looks a good resistance level. And where's the specialist going to open, or the designated market maker? Where's he going to open this thing to satisfy all those sell orders, in the book? I don't know who's going to be buying this thing up.
I mean, the volume's so high, though.
Yeah, okay.
It's hard. So let's go look at the book here. And also remember, like it's not like we haven't been up here. We've been trading, up here a month and a half ago. It's not like we haven't been up here for years. So I don't think there's a lot of, real huge GTC. There could be a little bit in the book. I'll go look right now. I got my book actually open this morning. So bring up DIS.
I know you won't take this because you said you don't have an opinion, but I don't think it closes over 142.
I have no idea. I literally don't know. I mean, there's part of the people probably that are down and saying, okay, I'm going to get my money back. Like, I mean, I bought this thing at 139. So all of a sudden I'm back up in the thing. And you think if I had it for, just a swing trade or, a shorter term trade, I'd probably be like, okay, I got my money back, I'm getting the hell out. I mean, I had this in long-term portfolio. So what I will say is if this does not hold 140, so if for whatever reason this starts to leak and starts to go under 140, then I'm concerned. You want to see this thing stay above 140. That was the point in September where it got up to at the double top. And I think, the old resistance becomes new support check. As long as we can hold over 140, you don't want to see this thing start to leak in the pre-market and not open over 140, like a scenario like that. So, I mean, 140 is critical for the bulls. We want to see this thing stay over 140.
Okay, so there we got. You got your range, 140 to 140. I don't see how it doesn't trade under 140 today, but stranger
things. Well, it could trade under 140, but I mean, you want to see it close over 140. You don't want to see it like all of a sudden, you might go down, you hit a few stops, people lean there, right? But then it gets back up over. You don't want to see this thing go 140, then 139.5, then 139. Now 140 is resistance again. If that was the case, then I would probably become a seller at 140. So 140 is critical. Okay. Just for the stock. And I mean, these big numbers, you trade around these numbers. And, maybe when we're out there in New York there in a week and a half, maybe we can do some talk on trading around the big numbers, and the strategies that are revolve around it. Because these numbers are huge, and there's multiple ways to trade around. Just because it's a big number doesn't mean you're going to go to there and fail. I mean, sometimes it's, it hangs out there and that can become a support level after too. So all kinds of, trades when you're trading around the big numbers.
Did we have a expected move on this? I should open my platform instead of asking you every day, but I think the straddle
I think
buyer.
it was 3 or 4%. It was more than normal. Disney's usually like 1.25 or 1.5%, but because of the Disney Plus stuff, I feel like it was like over 3. And if somebody has it, I'm too lazy to go look at it too.
Okay. All right, let's move on. We got some other big reports here. How about Stomps? Stomps.com coming back.
We were having some fun with this one yesterday after the close. So Stamps, man, who could have seen this one coming? Raising their guidance. So the EPS for the third quarter, they beat $1.12 versus a 72-cent estimate. Sales 136 versus 123 million dollars, and then raising their full year EPS guidance from they only raised it by 20 cents. The low end was $3.60. Now it's $3.85, and they raised their sales guidance as well by $15 million. So on the low end of the range. So nothing crazy as far as guidance raises, but a raise and a beat, and you filled that gap.
You're back. Oh, this is interesting. Let's see. You're above that high. What was it when they got a deal with the Post UPS or something?
Yeah.
Who did they do a deal with?
Yeah, that was UPS.
Yeah. So I'll look at 94.74. Former high of the move. I'll call that support right now. If you fall back below that area, you could give a little bit back. Wow, we're closed at $80 yesterday. Street leaning the wrong way into this report. I don't know, man. Make these shorts squirm and this thing go into triple digits today.
Probably, and watch for the 100 break to become a potential fake out too. Just be careful. This thing breaks over 100, sneaks above it, then comes back below it. Again, if you're trading around big numbers, when something is breaking out, you want it to stay breaking out. You don't want to see it sneak its head above it and then come back down and then start going 99.98, because then that breakout might just be that dreaded fake out.
Okay, the tough one. Ryan Craver. I
don't see either trade on either of these stocks. Not Disney, not STMP. I just don't see the setups here on these stocks today. Like a booking, I see more of a fade, just because there's other people, who probably, are happy to get their losses back from yesterday. But I just don't see the Disney, and I don't see the STM. I don't see clean setups here. And I mean, this is what trading is all about. Don't hit the curveballs. Don't hit the sliders. Hit the ones up the middle. There's nothing up the middle here. So I'm not making trades on either of these.
We'll give you another nothing up the middle trade, a wild pitch. Zillow Group trading up 354.
This one's always wild.
Yep, 36.98. They must have done okay, huh, Spence?
Yeah, the Q3 sales guidance or sales number 745 or 712 million dollars. What is the EPS here, real quick? Earnings per share, as I pull it up in my pro computer, being a little bit slow right now. One sec. Oh, there we go. EPS. So they lost 12 cents. They're supposed to lose 22 cents. So a beat and a beat.
What do we want?
Z or ZG, or as we say in Canada, Z or ZG. Those are your two stocks you want to pick. The risk, the HFTR bots keep this right in line. These two stocks just move really well together. I don't know. You're breaking out over 35. You got to stay above 35. So now you're in a little bit of breakout mode. I would say if I'm chasing it, which I'm not, you want to see it stay above 35. I'm just not that excited about either of these. I don't see a setup here either.
Okay.
No good setups here today, Joel. We got to find something good.
I'm sorry. I got a number here, 38. If you're looking for a potential target, that pre-market high 38.40. And then if you go back on your dailies, you got one high there at 38. That's 30. That's actually 38.05. So 38 and a half potential sell zone there. If it breaks above that, you get an interesting area because there's really nothing until 42. As far as support goes, it looks like you got a bidder here. Someone's trying to bring in some stock here under 37. So I'd say 36 and a half, 36.75 is a minor pre-market support.
Let's do these two together. The two gaming stocks both reported. Take-Two, which halted right before it reported, and then Activision Blizzard. Both had pretty good reports. Both got hit on it. ATVI, I actually did a longer-term trade in my retirement account. I sold half my ATVI ahead of the print. And then I turned around and took that money and bought Take-Two. So I was like, I'm diversifying myself in the gaming. I still think Take-Two is best of breed. And if you just look, Take-Two is down like 20 points in the last couple months. So I thought it was time to strike. ATVI is up in that same time period. So there's definitely been, come in from a pair trading perspective. So I'm in them both now. I'm in ATVI and TTWO, and I guess both half-size positions.
TTWO spiked out. Do we want the numbers?
It went low. Yeah, give us the numbers, Spence. Give us the numbers on both ATVI and TT. They were good.
Yeah. You know what's funny is typically, and just this is anecdotally, I feel like when a stock is halted in earnings, it's usually a bad sign.
Some stocks just do it.
I
think Take-Two just always does it.
I have no data to back it up. It just seems like every time there's a stock halted at its close, it means get ready for really.
When it's random, but I believe if I believe, and I'm just going from my memory here, but I feel like Take-Two usually halts. Some stocks just like halting into the report. Apple typically halts too. So Apple, I don't know if it did last quarter, but Apple halts sometimes too. Some stocks just like to halt into the report.
Maybe. All right. Anyway, Take-Two EPS $1.93 versus $1.68 estimate. Sales $950 versus $925 million. So beat and beat for Take-Two. And I'll just do Activision while we're here.
Yeah.
They are also beaten to beat. EPS 32 cents versus 23 cents, and sales of 1.2 versus 1.17 billion. So beats everywhere for ATVI and Take-Two.
They commented on multiple games. They commented on a lot of things. We know, is that Fortnite 2 out yet? Is that out? Because this, obviously Fortnite is what brought these things to the gutter a year and a half ago. And if we look here, I know Fortnite 2 is coming out. Is it out? Does anybody know? Is Fortnite 2 out?
I think it is.
It's the only thing that's the underlying, issue potentially.
Here.
Drake has not DM'd me to challenge.
There's a trailer out for it. I don't know if the game is out yet.
Chapter 2 is out. Chapter 2 is out.
I think it's just a trailer.
Christine says yes. Christine.
Okay.
Says
anyways, the Fortnite is the thing that's hurt them. So you've got to obviously watch these stocks because of Fortnite, and that's always been an issue there. Fortnite 2 will probably be an issue for them as well. These are just not loved. And I thought about, so this is, I was nervous about the ATVI report going in. I thought about selling the whole dang thing, which maybe would have been the call, obviously, in hindsight. But, I took the money, put it in Take-Two, diversify. I think long-term, I still like these. And obviously, Michael Packer's been on a show, and he likes ATVI. Long-term, I'm not sure what his opinion on was Take-Two, but I've always thought Take-Two was best of breed out of the big three, out of EA, ATVI, and TTWO. So
yeah,
I kind of always wanted to own Take-Two, so I bought a piece yesterday. So half the ATVI.
I don't know. I mean, I guess I'm just too old. I don't see these sector. I don't do it. I mean, for me, it's asteroids, pinball, Pac-Man.
I mean, they're played though. They video games are not going away. There is the whole e-gaming aspect of it all, that these three are obviously pure plays to e-gaming. It's just not going away. So, and I think long term, I think these stocks are still got some value here.
Okay. They Take-Two, they took it down to 108.50. And now you're back up.
Bought it right back.
Yeah, bought it right back. So
what's that tell you?
They want to buy it.
Yeah. The buy the dippers were all over Take-Two. Not so much ATVI. So ATVI hasn't been bought back nearly as much, obviously, off those lows. So you can see just from after I was trading last night, there was people or institutional money lurking on the dip on Take-Two. Now it's all the way back up. So on a dip, I think you got to be a buyer of Take-Two. I still think the stock is one of the better ones, if not the best of the publicly traded ones. I think eventually makes new all-time highs. It's $140, $139.60. I mean, obviously you're 20 points away from there now. We didn't get up there on the last run, which is the bears case that you got the long-term double top in there. But I think eventually these stocks will come back into favor. I don't know when that is, but threw it in the retirement account saying eventually it's going to happen.
I'll tell you right now, keep a close eye. First of all, you want Take-Two to go green here, down 41 cents at 116.50. So it goes green. I think that's a major positive.
It is.
You are trading this thing. You got to keep an eye on 118.50. 3 of your last 4 highs are right under that. So above 180, gets above there. I think things really got a chance to rip to the upside. I think if you stay under this 118.50, I think bears are still in control on TTWO, and then ATVI. That got hit. They bought it yeah, I mean, it's come back
It
up.
went up to 56 on the report. So it
Yeah.
was trading down ahead of the report, 54.5, and then it ran to 56 on the report. I actually thought about trying to short it on the report. It was so fast. So I went up there and I was like, oh, it's stalling out. You could see it just in initial headline. The algo's wrong again. They buy it on the beat. And then you could see there's just no bids. And this thing, the algo just bought it all the way up to 56 and it's going to puke it back out. And it just started collapsing. And it kept going down, down, down. And we went under $53. So on that initial bar, algo, bad news algo, bought up to 56. Complete mistake by that. And then there was no bids. And then there was like 100 shares of 55.5, like 100 shares of 55. And they're smacking all that out. And I'm like, oh, this is going red. But even at that point in time, you know, it's really hard to get a short on at that point in time because there's nothing to hit. So you can tell it's going down, but there's just nothing to hit. I mean, this is about, you know, knowing the tape. And, you know, 20 years experience, I'm pretty good at reading the tape. Sometimes you can read it and this stock is going down and there's no way to get it. And there's nothing you can do about it. There's just nothing to hit, especially after hours. Like you think, you know, when you trade during the day, you know, you can always hit a bid. There's always a bid there within like a nickel or a dime. When you're after hours, sometimes there's just nothing in there. So you knew it was going down. Do you want to hit it at 54.5 now? Banking that's going heavy red? Not really, after just traded 56. So then the trade's done. So you basically, to make money, had to be out there ahead of the print. And then the print hits, the news algo buys it up on the beat, and it's wrong. And the news algo loses significant money once again.
All right. Let's see. I gave the take two, the ATVI. Dennis, thanks for breaking down that trading action. Big bar from yesterday in the issue. So very important for it to go green, which it might not be able to do. 54, 55. Yesterday's low right in that area. So we use that as resistance. Losing 54 here, that's not good. That's not good for the issue. A low 53.
Critical that holds.
Yeah. I don't know. It just looks kind of.
I'm nervous on the ATVI. I like to take two better. So if you're looking, I own both in the long-term portfolio, but as a trade, I would rather be in take two than ATVI because the after-hours action looked better in the take two than it did in the ATVI. The ATVI still feels heavy to me. It's had a pretty good run. So, you know, obviously I own both in the long-term portfolio, but I'd say I like to take two better than the ATVI.
All right. Disney just tried to. I thought I saw it higher than this. I see it
still hanging out 141.
141.
It's really settling in. So I don't think Disney is going to have this wild 3 or 4 point sell off from here. I don't think it's around 3 or 4. It's kind of settling in. The price discovery has happened. The stock reported after the bell. We had 4 hours of trading at last night. We've had another 4.5 hours of trading already here this morning. It's kind of settled in.
Dion H is looking for Expedia to bounce today. Well, if you're expecting Expedia to bounce today, it has to hold yesterday's low, and it's trading up. I tell you, it had for that shellacking it took yesterday for it to only be up 52 cents
on a booking huge beat like that.
Yeah, not good.
No, not good at all. I think it could go back red even. So this is just an example of a stock that everybody is annihilated in. If you were saying, okay, it's down 20, how low can it go? And you bought it, you know, at 110 or 115 on the opening print. So here's here's what could potentially be happening. You have a stock that closed the previous day 135, has a disappointing earnings report, opens at 115. People saying, oh, it's too cheap. There's definitely people that were saying it's too cheap. They bought 115. Within 5 minutes, it's at 110. Within 10 minutes, it's at 105. They're down 10% on their investment because there could have been long-term investors coming in this in 10 minutes. This is why you do not try to call bottoms, folks. Calling bottoms loses a lot of money. These things, the dust needs to settle here. The dust is still floating in the air. The meteor just struck. The meteor just struck. All the stuff and particles are thrown into the air right now. It's smoky. Nobody knows. Nobody can see anything. I mean, this is a mess here right now. Let the dust settle. Then you can look with, you know, when the smoke clears from the meteor strike, it can clear out. You got to wait a few days before picking a bottom, my opinion on this one. You're coming in here at 98. This thing could be at 90. It might not be done yet. So we don't know. I'm not saying it's going to 90. I'm saying I don't know it's not. So, you know, let the dust settle. We saw this with 3M. Reported disappointing earnings, remember, and went down for 3 or 4 straight days afterwards. And we've seen this again and again this earnings season, where some stocks, when they've really been hit hard, have continued to leak for 3 or 4 days and gotten really, really ugly. So I cannot say, you know, Expedia, it's really bad that it's only up 50 cents when booking is up 100 points.
That's what I was at. That was my first.
That's really, really bad. That's a great point, Joel.
Thank you for that Star Wars analogy there when you were doing that.
And TripAdvisor's same story. Both stocks annihilated. I mean, I cannot, I would not be looking to buy a bottom in these things. Not today. Maybe eventually, but not today.
Did you hold on? Go for the W wants to know if you got out of any of your square yesterday, and I will say no.
No, I'm in it all.
Yeah, no.
I'm in it. It was a wild ride, though. I mean, the stock went red right off the opening candle, and I didn't get it. Like, their earnings were pretty good. Finally, the real money showed up, and they started buying the hell out of it. And it ran and it ran and it ran and ran from the low of the day, which is 60.5, up to over 66.5. You're talking about a 10% intraday move. Then it came back down. So now I think you have buyers below. I think there's people saying, okay, that quarter was pretty good. I want to come in here and potentially, be a buyer here. So I think on pullbacks here, I might even add to the position. If it got down to 63, maybe even get lucky, get it down to 62, I might add to it. So I like Square still.
I did notice on that one when I was doing the write-up for the show, it went 4 cents below the previous day's low. So if you were so inclined, say, hey, the report's not bad, maybe I'll try yesterday's low. Boom, you would have gotten filled and you wouldn't even have a chance to cart it up, and it was moving in your favor. Okay, that's Dennis. What else did I ask people? Okay, you answered that question here.
Somebody's asking about Akamai. I mean, I had a rough day yesterday. Again, long-term portfolio. I threw it in there. Obviously, my timing's been bad on my long-term portfolio lately. But I will tell you this again. I think about like my Merck investment. This is why you have to separate retirement portfolio from trading portfolio. When I bought Merck, I bought it like $32 or $33. It went down to 26 on it immediately, like almost like within a month. Now look at Merck. And Merck, I ended up making 200% on it. It took 5 years, but that ended up working out. You have to be able to separate it. You're never going to get the timing perfect, but a lot of times I buy when there's blood in the street. I don't like to buy the first day when there's blood in the street in the case of Expedia. But once it starts to settle, I think I've got, some value down here, then I do come in the long-term portfolio. And sometimes I'm wrong, but I'm sticking in the long-term portfolio and I'm going for it. I mean, Akamai had settled here for a long time. It doesn't look good now. I know I would not want to be in this for a trade. Terrible candle yesterday. Tech did not really perform that well yesterday. There was a lot of tech stocks that opened strong and started to look weak. So timing, definitely off on my Akamai buy. I thought it might hold up here, and obviously not the case. It looks weak. I probably should sell it and re-get in it. But again, when I trade my long-term portfolio, it always gets me into trouble, just like Qualcomm. I traded out of that well at 80. It went down to 68. I never rebought it. Now it's at 90. So in the long term, that 80 sell was actually bad because I didn't rebuy it. Separate the long-term investing from the trading. Don't confuse the two. And don't make a day trade become a long-term investment. Keep it completely separate. If I was in Akamai for a trade, I would probably sell it right now. But I'm in it in the long-term portfolio, not going to look at it. And it's and we'll see how it does. Valuation's not ridiculous.
Yep, that's a big old low that you need to keep an eye on from yesterday.
But again, if you're worrying about all these little technical levels as an investment, you're watching your investment portfolio way too much. My worst thing that I do is I talk about my investment portfolio on the show, and I have to because I have to disclose that I'm in the stocks when you guys are talking about them. I did a lot better probably before the show when I didn't look at my long-term investment portfolio. That's how you have like stocks like I've said before, MasterCard. I bought it $16. It's $272. This is long-term investing 101. Don't look at it. And sometimes they're terrible to look at. And obviously in the financial crisis back in 2008, 2009, I bought some stocks. My investment portfolio dropped 40% during the financial crisis, and it looked awful. You know what? All those stocks that I held through that, though, like the people who panicked and sold it all, obviously are not making the money. All those stocks that I held through that are all the biggest winners in my portfolio. I wish I would have held everything. I mean, I bought eBay at $11. eBay spun off PayPal in equivalent shares. So eBay is 134 when you add the PayPal and the eBay now. It was $11. It's up 1,000% since the bottom of the financial crisis. Long-term investing, if you pick the good companies, works. If you're shaking out for 1 or 2 or 5% all the time, you're never going to get those big winners. Never going to happen.
And I was just for the AKMI. This is just from a shorter term perspective.
Yeah, I'm saying the same thing. I would not want to own this short term.
Yep.
It would not be in my short-term trading portfolio long right now.
85.75, that was your low on the August 16th, and then you came down to 85.63, and then yesterday you came down to 85.5, and then not bouncing here either. So looking for some downside below 85.5 on a short-term trade only.
All right. Speaking of streaming and Disney Plus and Akamai, let's look at the trade desk here. TTD. They also do some back end technology for streaming providers. They had earnings yesterday after the close. Q3 EPS beat 75 versus 67 cents. Sales beat 164 million versus 163 million. They gave some Q4 sales guidance that was higher than estimates, and they raised their full year sales guidance as well from by really a couple $1,000,000. So
Which stock was this?
This is TTD.
Oh, the trade desk.
Yeah.
So the report was pretty good.
Yeah, good report.
It doesn't matter. Momo, they hate you right now. So that's why the stock is down. All that matters is sentiment towards the sector. They don't like anything that's trading with a nosebleed multiple. Same reason why they sold Roku on a good report yesterday. TTD is down. This trade will change. You will start to see the Momo catch love again. That's why I started nibbling on some Momo stocks like Workday in my long-term portfolio. Because you know what? Eventually the story will turn here. Right now, though, nibbling is okay. I would not say flat out buying is okay because all these things are massively out of favor. And I don't want to own any of them in the short-term trading portfolio. Not from the long side because they're all out of favor here. TTD, absolutely critical that it holds 180. I know the after hours low. It's amazing, Joel, how these lows work. But you had so many lows back in September, October, like 1, 2, 3, 4 lows right around 180. Where do you think this thing got down to last night?
I see a print. It's 78.88. So basically,
call it 180. I mean, it's a $180 stock within a buck of that low.
If you didn't have a bid out there,
you never would have got it.
Way down. Good luck trying.
If you were sitting out there with a bid at 180, you're happy you did it because the thing bounced and was 185 like 5 minutes after it printed that 179. And now obviously trading up at 188. So it's come back. So the good news is for TTD, this thing has come all the way back. I'd say, you know, lower 180s, you got support there. And support is support until it's broken. So I'd be a buyer in the lower 180s, leaning out at least say 177.
I mean, also the stock has really had one hell of a year also. If you look at it on a longer term perspective, it ended 2018 at 116.06. So still sitting on some nice gains in this one. So just keep that in mind when you know, you're going and you think you're getting it cheap here at 188, 189. People still sitting on a lot of profits in this one. 832 S&Ps are hanging out just under mid-range on the session, down 350 at 3082.50. So bouncing around pretty good here. Disney sniffed 142. Where'd we get to the House of Mouse here? We got to 141.84, I believe. And then we backed off a little bit. So that 142 level, I'm liking it even more now that you went up there. You went up to thought I saw it higher than 141. Boom, boom.
We're 141.10 right now.
141. Yeah, got 141.85. So I don't know. Not calling it rolling over that the higher day is in or anything, but adding more significance to that 142 level.
And 132,000 shares to buy this morning. So far, the imbalance at it will probably grow significantly in DIS.
Let's do one more in non-earnings before we go to our guests. Let's do the Gap. Gave some preliminary guidance yesterday, in part because the CEO, they announced the CEO is stepping down, and also gave some guidance. They're due to report earnings on November 21st. So the guidance they gave yesterday, just to give us color before that report, it wasn't good. They lowered their preliminary, or I guess it was a big miss, their preliminary Q3 EPS guidance. They gave a range of 34 to 36 cents versus a 55-cent estimate, and they cut their full year EPS guidance from the low $2 range to the high $1 range.
I mean, the CEO, you know, basically just jumping ship here. This is just, we've talked about the Gap. We've hated Gap here for a long time on this show. If you've been listening to this, we've hated this since like $35. I'm not, you know, we're not tooting our own horn here, but we have not been a fan of the stock for a long time. When it rallied in 2017 from 20 to 35, I said, I have no idea why the hell this is rallying. I ended up being correct. Should have been shorted, I guess, but you know, it is what it is. Stock's $18, you know, close, 16.37. CEO says, I'm out. I mean, why? What? You're going to get an Old Navy spinoff. Okay, that's the only good part of the Gap. So they're going to be left with garbage.
What about Athleta? Do they own Athleta, Spencer?
They own a bunch of stuff, but it's all mall based, like, or strip mall based. I mean, you look at like American Eagle, Yeah, but Aeropostale went away. I mean, American Eagle, I think the same story here. I just don't see the growth. I don't see a reason to own these retailers, these, teeny bopper, whatever you call it, retail stores. I mean, yeah, they got some cheap clothes in there, but you can buy cheap clothes on the internet. I mean, I can buy cheap clothes a lot of other places too. I just don't want to belong in any of these stocks.
Well,
not American Eagle, not the Gap, none of them.
Doesn't the Gap own Banana Republic? They're okay.
Banana Republic's good.
Yeah, they
got a couple good pieces. They got a couple okay pieces.
Dennis, you wear free stuff more than like your shirt.
Well, right now, yeah. That's why I got to go to New York in a week and a half to get another T-shirt.
You wore that.
I'm gonna get a free T-shirt at the Benzinga Fintech Awards.
Wait a minute. You wore that shirt yesterday.
No, I did not wear it yesterday. I definitely didn't wear it yesterday.
You wore the one with what was the goofy one you were wearing yesterday?
Well, I wore the Billy shirt with Arnold.
Hey.
All right, whatever. Fine.
I wore the comma chameleon shirt. I wear a different T-shirt every day, but I'm representing. You should be complaining about my Benzinga shirt. Raz, if you're in the back, he's complaining about me wearing a Benzinga shirt.
I'm not. All right.
I ratted you out.
Let's bring on our guest today, Bill Baruch. He's the founder and president of Blue Line Futures. Joins us periodically. Break down all areas of the market. Bill, good morning. Can you hear us?
I can hear you. How are you today?
Doing well. How about yourself?
Doing great.
So I don't know if you're listening. Any opinions on anything we were just discussing about the Gap or any of the earnings from yesterday?
I did hear you guys talk about Disney. I'm looking at that from a couple perspectives. Got the chart, really constructive chart, and that can't be ignored here. Obviously, the breakout back in the spring, holding the 200-day moving average, and as you guys discussed, trading above 140. 140 is a pretty pivotal level here. It's a peak from September, fell off there, and it's a 618 retracement. For me to see the move here, hold that 200-day, and you get a weekly close out above 140, I think that's extremely constructive. I like Disney, and the earnings call was very upbeat, exuberant. I think overall too, you saw some components that bounced back from poor for their quarter three. You had the theme parks, the studios revenues; those all came in much better than expected, and I think you're seeing a good picture here looking out to Disney Plus launch. So I like Disney a lot.
Yeah, I mean, we've talked about it. It's just such it's a compelling story. So, and the launch is next week, so we'll see how that goes. They didn't disclose how many pre-subs they have, so we'll see next quarter what they actually get as far as subscribers for the new service. Let's move on here. Let's talk about the banks. We've been talking on our show about this temporary, or I guess it's temporary, this shift in the past few days, a few weeks from growth to value, and how long that could last. Banks are a part of that. So give us your view here of what's happening in the financials.
I like the banks a lot, but I've liked the banks a lot for a while. I mean, a lot of the media have done going back to the summer. I loved JP Morgan, was one of my favorite stocks out there, looking for breakout. I mean, I put a target about 130 out there at least over a month ago. So is this where you buy them? I mean, you can't just chase price action up here. I mean, I think you got to look at the broader market too. A lot of the move that we've seen here over the past couple of weeks, I mean, this is what we were expecting. So I like the banks, but I think you want to let them cool off a little bit if you're more of a trader here. The one thing I do like about them too is you're seeing stability in the rate overall, the rates. Treasuries yesterday, big washout in treasuries. So you're seeing a nice move in rates. You're seeing a steepening curve. That's great for the banks. JP Morgan, again, 130 is a target of mine that we're basically there. You're going to run into resistance in Bank of America, just overhead, a couple of dollars overhead. You got a longer term retracement level. I mean, we're breaking out of a more near term range in Bank of America, but you're going to get some strong resistance about $35. So again, there's definitely some overhead resistance. No reason to chase it, but I think the banks are something you want to keep a close eye on, as long as the rate picture remains stable. Now, but also talking about rates too, and not to transition too quickly, but looking at the broader market, you start getting the Treasury, the 10-year closing in on 2%. That's something that's going to be an elephant in the room. Is this market going to withstand rising rates, at least at the velocity that we saw over the past 48 hours and really through last week? So that's something to really keep a pulse on too.
And Bill, do you like, so I guess before we leave the banks though, you'd be buying on dips?
Yeah, I mean, ideally, look to retest that breakout, look for some construction closer to the 120 range, and JP Morgan 120 to 123. I mean, looking back at Bank of America too, we had a trend line breakout recently. Coming back in and maybe even testing some of the recent highs, closer to $31. I mean, so again, you don't need to chase this stuff. Be patient. You're gonna have your buying opportunities.
What about energy here? Do you like energy?
I have not been a fan of energy. I've been fairly bearish. I mean, overall, broadly talking about crude oil, it struggled to get above the 200-day moving average, couldn't close above there again yesterday. Looking at some of the bigger names, like an Exxon, I mean, yeah, there's decent earnings reports, but they're not doing anything. I mean, they're really lagging the market, and I think that theme is going to continue. I mean, there's a big downward trend. I think I would have to see a big steady move in something like Exxon out above $82. I mean, to even start to get excited about it, but ultimately, I think rallies could be sold into as shorting energy names, shorting the sector, shorting crude oil. I just think it's an underperformance. It's going to continue to be so.
You also said yesterday that when we spoke that you liked Google. Explain that.
Well, Google is one of those ones that we're not really even hearing much about right now, but they're, we're trading out to new record high yesterday. Trend line overhead wise, we're breaking out above. So I mean, this is telling me, you look back to last week, we fell off, really well-defined trend line there. And yesterday just shot right through it. So I want to see weekly close above there. Let's call it 1300. I want to see some construction against yesterday's action, but you had somewhat of a, underwhelming earnings report. You're getting this Google Alphabet powering back. I like the stock. I like what we're seeing, coming out of that earnings report. I like what we're seeing in the technicals as well, breaking out above that trend line. So, I mean, it looks really healthy right now.
Someone just dropping this in the chat. Is Google value tech now?
Ooh.
Would you say that?
I don't know. I don't know if I can consider that value yet. I mean, but relative to some of the others, you may be talking about.
I'll say it. That's value tech.
Okay.
I'll say it. I've been saying Google for a while. Growth at a reasonable price. I mean, you look at a lot of FANG, really, when you look at the valuations on some of these, they're not crazy. I mean, obviously Netflix, we can throw that one out, but Facebook valuation's not crazy. Google, I don't think it's crazy. I mean, the growth is still there too. Obviously Apple is total value tech. Even Microsoft. I mean, let's talk value tech for a second here. What are your thoughts? I mean, obviously, even look at a stock like Microsoft. I mean, it's been an incredible, resilient stock, obviously holding up, even towards last year and then having a nice run this year. What are your thoughts on a stock like Microsoft? Can that continue to run?
I love Microsoft. I've been saying that for a while. It's been one of my favorites out there. This morning too, I was on CNBC Worldwide Exchange, and they wanted me to talk about another name other than Disney, the streaming wars. I like Apple. I mean, I think you're seeing a lot of the shift away from the revenue concentration on the iPhone. You're seeing some good numbers come in the streaming. They're doing some innovation that way. I think Apple is really a place as well to be looking at. I find, obviously Amazon has a lot of number of things going on, but I prefer Apple over Amazon, over Netflix when we're talking about streaming.
Any other earnings reports that have surprised you one way or the other?
I mean, I guess not surprising with Chevron. I think Exxon surprised me a little bit. We've seen, obviously you guys are discussing Expedia, Booking, just pretty bad earnings across the board. I think you're looking at, there wasn't much expectations for them. But for what we're seeing, I think overall there's a lot of spending, but the environment we're seeing is people are traveling. You expect the industry to have a little better numbers coming out of that. So I think just looking at it this week, the travel sector was a little surprising. I think a stock going back a couple of weeks ago was Chipotle. It's just continued to kind of trickle lower, but we're closing in on the 200-day moving average. So I think there's something there that to definitely keep an eye on. It's an area that was a big pocket through the early part of the year that we want to see this thing hold out above about 720. So yeah, I think if I had to pick the most surprising one over so far, disappointing wise, has been Chipotle. But I think there's still a good area of support coming in around 720 to keep an eye on.
What about McDonald's?
Oh, well, I mean, McDonald's, you got a couple other headwinds going in there too, coming out this week. But I think it's a tough one to touch right now with the overall shift on the top of the executives. But it's been a good stock. I mean, nothing overall long term. But I mean, you're seeing this a lot of damage more recently. On a technical basis, 190, you want to see a battle there. 190, where it really started to lift off this year. If it can hold that, and you can see some more positive headlines. I mean, there's definitely decent value in something like McDonald's. But what you don't want to see is sort of headlines that continue to be a headwind there, and then potentially seeing it slip somewhere 170, 160. I mean, that's where there'd be really good value. But you don't want to be jumping in at 190, hoping it holds, trying to catch a falling knife, and then you find it at 160.
We're on the line with Bill Baruch. He is the president of Blue Line Futures here. Bill, a couple questions here. First question, then a comment. I know you follow the futures markets, S&Ps, crude oil and stuff. So what do you do for targets on the upside here when you keep breaking out and making, a big old breakout like this? And I still, when I do my levels, I like to have some support. I like to come up with resistance, both sides of the market. How do you come up with numbers? How do you come up with resistance?
Well, we put out research each day for the future side, and the S&P as well as the Nasdaq. We've had some good levels out to the upside. You go back to April. There's a trend line, overhead trend line in both. Okay. And 3115, the S&P is a big level that we're watching. In fact, it's been our target in the research that goes out each day. Correlating with that, the Nasdaq has a level of 8240, that trend line. From same thing, same rising trend line. Nasdaq has gotten out above it though. I've also talked about the wall round numbers of the Nasdaq more times than not. Even look at last night, you had 81.96 in the Nasdaq before bouncing. You're getting the law round numbers. The round hundreds end up performing. So when we started breaking out more early part of this week, the S&P had about 1% to go and hit that with 3115. And then you're looking about almost 1% to go in the Nasdaq to hit 8,300. So that's really my next resistance up there in the Nasdaq. Another thing I'd like to look at is when we consolidate in ranges. What's that range? And is that range a 40-point consolidation? Then we're breaking out above that range or breaking out below that range. You should be able to get, if we're talking about breakouts, you should get another 40-point extension there. So I like to look at that as a way to eyeball where this market goes, but as well looking at a 50% of that range extension too. So it can give you a way to plan ahead. And I always like to, listen, if your time frame is shorter, then you want to be able to be trading on your own accord. You don't want to be being forced out of the market. So if your timeline is, you're a swing trader in the market and you're looking at 48-hour holds of positions to up to a 1 week long hold of positions, then you want to be selling into strength. You want to have those targets because more times than not, there's a lot of headline volatility out there, and you're prepared to re-enter as that as well. So we have a very shorter term mentality with Blue Line Futures. Our research is catered towards where's the next 3 to 5% in the market, shorter to intermediate term, but it can also be used to day trade some of the levels there. And then we're going a soft launch right now, but Blue Line Capital is a wealth management firm that that's going to be fully launched here in 2020. So we're real excited about that. It's given us a way to work with current clients on the future side and be able to do portfolio management with them and do some of the stock picking, some of the stock talk that I've done in the media and research I've put out, and be able to make an impact on their portfolio in that way as well.
All right, Bill, before I let you go, I know you're in the offices of the Chicago Board of Trade there, the Merck, and you spent some time on the trade desk at Lynn Waldock and MF Global. Do you have a good pitch story, a good story, a bad story, or something from being on the floor that helps shape your trading strategies?
Yeah, absolutely. Back at MF Global, when I was really first cutting my teeth on commodities, I was really quickly learned how well leverage can work for you, but as well work against you. And I saw different traders hold positions, investors on the desk, more of a retail or somewhat professional, but coming in and you could be right in a market you could be wrong in a market, and you can hold that position, and you can kind of just with misery kind of hold it out, and the market's going to at some point could come back, and you'll feel like you won, you made money on it. So and then but that mentality in the end is what gets people. There's a good story going back at with that wheat. I think it was 2008. I think it was 2008 or 2009. Wheat, it kept rallying, a big huge move, and there was a client on the desk just fading it, sending money, fading it, and then wheat rolled over. He championed the move, but that mentality is what got him in the end, because a few months later, natural gas ripped his face off, and that was the end. So you can't just keep throwing money at a position. You got to have a management strategy for the long term. So that's what I'll leave you with there, I guess.
Bill, if you like leverage, you should try Robinhood. I hear that a lot of really good opportunities for using leverage there. Bill Baruch, he is the founder and president of Blue Line Futures. Bill, thanks so much for the time today.
Thank you for having me. Look forward to joining you guys again soon.
All right.
Thanks, Bill.
8:51. We got a couple more minutes. We're not going to do a hot potato today. Instead, we're going to bring on Patrick Lane from Benzinga to talk a little bit more about the upcoming Fintech Awards. But we've got a few minutes before that, so let's cover some more stuff, I guess.
Bitcoin under 9,000, down 430. No, I just thought I'd mention it. 8,790. That popped to 10,000, being quickly faded here. S&P's still down 3. Disney under 141. I don't think it's going to open over 140.
Well, 140 is big. I mean, it's getting sucked down right now. So can it open over 140 is going to be the question. You asked me about size there. I cannot see in the book that far. Maybe JV Specs book. Sometimes he sees further for some reason. Got a better book than I do. I can see up to 138.25 right now. So many levels in there.
Yeah, there's a lot.
So there's some size to chew through. So I don't know. Can it open over 140? That's going to be the critical number for the stock to hold.
Let's look at the Yelpster. Yelp reported yesterday after the close. EPS missed 14 cents versus 19 cents. Sales beat 262, essentially in line at $262 million. Not a great report from Yelp.
Just bar set low. Stock killed into the report. Everybody's expecting the worst and wasn't that bad. But you got overhead supply coming in here all over the place. 33 to 34. I think the short setup's a lot better than the long setup here. 34, leaning at 34. So if I was going to short it, I'd say, I'd want to 34, but then you can almost it's hard to short it. But if I was long this thing, I'd be like, thank you for giving my losses back from yesterday and the couple days before. I'd be getting the hell out.
Boy, oh boy. Battle at 33 is what we're going to look at today. It is over 33 right now, but you had a pair of highs from Wednesday and Thursday, 33.26 and 33.14. So if it can hold 33, I think I would take the others. I'd look for this to go higher. Under 33, a lot of room underneath, closing near the low of the session. But I think you will find buyers here. People maybe shorted a little bit too late yesterday. So what do we got? We got 853.
Yeah, let's do like one more. I'm going through the chat here. I know we've been missing a lot of those. I see here. So let's look at Turtle Beach here. Remember when that one?
Is that still stock?
Yeah, someone dropped it in the chat here. They reported yesterday after the close, the EPS beat and the sales beat, but they lowered their guidance for the year, the full year EPS guidance.
I mean, it held after hours. I did see it below 9. How low do we get? I would say 846 would be the major support there. Unbelievable, these moves. You know what? You just got to sometimes trade these things after hours at these levels. I hadn't even saw the after hours chart till you just brought it up there. And look, it bounces right at that support level, 850. So 850 is your line in the sand. I mean, that's the level that absolutely continues to need to hold. Long term, I think this is a stock I definitely don't want to own, like not at all. But short term, you got a level. 850 is the level you're leaning on.
Yeah, and what Dennis is referring to is all those lows back at the end of August, early September at 850. Stock was 1250 a couple weeks ago. Now at 850, I see that. We'll see what happens at $9 too. You had a low right at 9 at 905, a few under here. So first $9, and then Dennis mentioned that major support there at
just keep it simple.
Keep it simple, stupid.
All right, Joel, quick update for us on market.
We're leaking a little bit down 350 here. I don't know. Gotta go green on the session. An all-time closing high from 30.86 is what I'm gonna keep an eye on as a target. And we are joined here by Mr. Patrick Lane. He works on our corporate events division. And when him and Nicole tell you to do something, you do it.
Very kind of you for having us, my friend.
You get in trouble. So we got the big event coming up a week from Tuesday, and tell us about the event, some of the highlights, and get some more people to participate.
Absolutely, and thanks for having us, you guys. We really appreciate the audience, and Joel and Dennis and Spencer really kill it for you guys every single day. So we're very, very proud to have them on the team. One of the things that I think is really the killer about this event is that, you know, being at Benzinga, we are a fintech company. We're a financial media company. This event is sort of the cross section of those two things, right? We have all of the major players in the fintech space, the big corporates, the guys that are changing the game from, you know, the seed stage level, the fintech startups that are bringing those new ideas to the table, and we're letting them all meet one another. So in one way, it's a big B2B play with lots of partnerships on display in some of our content, like Green Dot and Stash and their new partnership. You know, other things like that we're going to put out there. The three different panels I think that might be interesting for you guys are the brokerage panel and how that space is going to shift for the zero commission customer, right? You're gonna hear from TradeStation and Webull and TD Ameritrade, Trading Central on that specifically. We're going to talk about market data and how that relationship with some of these fintech companies, us being one of them, but specifically provided by the exchanges, is another really, really cool topic. So you'll hear from NASDAQ and CBOE, OTC markets on that. And then, you know, we're gonna talk about data in general and how that's changing the game for some of these fintech startups and how they're forming, you know, what their trajectory is like. Long story short, you know, the one highlight you guys should know is that Joel and Dennis are going to be there in person, right? You got to come see these guys, shake their hands, pat them on the back.
Besides us, who are some of the big boys that are going to be there?
Oh, we got all of them.
Talk to some of the big boys.
We got all of them. Yeah. I mean, in the investing space, I mentioned a couple of them, right? But you'll also hear from people like Quicken Loans. You'll hear from WorldQuant. You'll hear from Amazon.
JP Morgan.
JP Morgan will be there.
IBM.
IBM Watson. Tom Eck will be there. It's really interesting stuff too. I mean, I think at the end of the day, this event is one where every single person is interested to meet one another, right? We're all walking the floor. We're all listening to the content. Lots of partnerships potential there.
All right. Spencer told me not to ask you to sing.
I would never do that on this.
You would not do that?
I would never do that on this.
Is he a good singer?
Yeah, I'd have to talk to my agent first.
He's a great singer and
you guys,
a great actor.
You guys, Joel's drunk. I don't know what he's talking about.
What about the Fintech Awards? Wasn't there a song that they made up a few years ago at the Fintech
I was
Awards?
really hoping you would forget that. Yeah. Yeah. Jason wanted all of us to sing a song, and I forget what it was. It was like Howie Day or
Did he have someone make up
idea.
a song? Maybe that was pre-Patrick.
Yeah, it was Spencer. It was you? What was the song? Do you remember? Yeah. Yeah. What you should have asked Spencer to sing it. I think that's what you should have done. You guys make sure you ask Spencer in the chat for
okay. We handed out some special deals yesterday. Is there anything we got a little over a week here? Can we cook up another promotion, or what do we got going? What's the best way for people to sign up for the event?
Yeah, we'll make it really simple for you guys. It's bzawards.com, and that's plural, bzawards.com. Use the code, I think it's PMP VIP.
PreMarket Prep.
Yeah, exactly. And that should get you a nice little discount in. And I think we were running some flash sales for a competition for a couple of free tickets. So if you go on there now, you might get in for free.
All right, Patrick Lane running our corporate events here at Benzinga. You get to see Patrick at the awards as well. Thank you. We'll get you or Nicole on next week. Thank you.
My pleasure, you guys. Take care.
Triple D, are you still there?
Yeah, and you know what? I'm going to put together 3 presentations on the side stage, I guess, for the Fintech Awards there, and we're going to talk trading over there too. So not only are you going to get a chance to meet, you know, the people like Gene Munster who are going to be there, on the big stage and talking, you know, the technology behind it. We're gonna be there talking trading as well. So I'll give you a little sneak preview here next week on what I'm going to talk about. If you have something, I haven't, you know, I've got just so much material sitting on my computer, and I put these together, you know, and talk about different subjects. If you have a specific subject, you're going to be there, and you have a specific subject, you know, give me some ideas, because I can maybe throw some of this stuff into some of my presentations as well. So, you know, obviously I'm going to probably be focused, you know, on different strategies that, you know, I talk about on the show all the time. But, you know, I can also talk about different things as well. So send me, you know, tweet at me, or, you know, hit me up in the chat, or, you know, there's different ways. Obviously, Twitter is the best way to reach out me. And send me your ideas for what you want to hear out there at the Fintech Awards.
Yep, and
Joel too.
yeah, I'm cooking one up there too. So we'll do it. We'll try and, you know, do really specific things. We'll do some general things, and I also got a special announcement here, Dennis. And you don't know about this, but you know, we're doing the show there in the morning, right? We can't. The way it's working out, we're just going to be able to do it on the stage, and we're not going to be able to have a lot of visitors in there, but. Guess who is going to drop by and be a special guest on the show when we're in the Big Apple?
Who's that?
One of the funniest guys on Wall Street.
You're bringing on
the funniest guy.
Hit the bed?
Yep.
Kenny Glick?
Yep.
Kenny's always good. So
Yep.
Kenny's going to come on the show live. Nice.
Yep. Frank, no hot potato today.
Next week, we promise. But
we'll cook something.
Yeah, we're trying to do some.
I'm disappointed in no hot potato. I was ready to really bring it this week.
Yeah.
All right. Well, you'll have to wait till next week.
All right. Before we close out the show, we're down 250 here. Nice 14-point range. Let's keep an eye on the pre-market low as potential support, and Disney. On the fade here, folks. Maybe won't see that 142 today.
140 is critical, and it's leaking. It looks like to me they're sucking it down to 140 for maybe an open at 140 or below it. That's a concern.
I mean, I just, like you said, there's 132,000 to buy in the open. I
192 now. It's going to continue to grow, but there's a lot of size to chew from. It's right now the projected opening. So, you know, this is something that comes out at 8 o'clock as well. I got projected opening prices. Right now, the projected opening is 139. That changes as more order flow keeps coming in. Obviously, we're not opening for 28 minutes here yet. So that's going to continue to change, but you can bring that information up. I can give you a projected opening for any stock on the New York Stock Exchange right now, you know, where it's projected to open. Those change, obviously, you know, as you continue to see, you know, new orders come in. But, you know, as of right now, like Square is projected to open at $62 because it's got 66,000 to sell. But that's not going to open down there. There's going to be a lot of people, like I would come in and buy it at 63. There's going to be other people that come in. So it's probably going to open down, you know, as other things, if unless something drastically happens different in the market. But, you know, a lot of times you see these opening prices and their projections are so low because there's just no orders in there yet. And a lot of times the orders don't come in until the last, you know, minute before the open. All the high frequency traders come in there too, you know, right before the open too. So, you know, you see something projected opening down 5 points, high frequency traders, liquidity providers like myself will come in and, you know, buy that stock, you know, put orders out there to buy the opening stock. I'll buy that thing if it opens down $5. But I mean, it's information. Ask your broker for that. You know, the projected opening price. I use it every day.
Okay. All right. Spencer, you want to wrap things up?
Right.
Preview Monday show.
Yeah. Well, just real quick, going back to the event, Patrick gave you the promo code and the website. I'll do you one better. I'll give you a direct link to the Eventbrite page. Just dropped it in both of the chats. Again, promo code is PMP VIP to get that discount to the Fintech Awards. I want to thank our guest today, Bill Baruch. Thanks to all of you in our chats. Please remember all the information on our show meant to be used as informational purposes only and not for investing or trading advice. Everyone have a great rest of your day. We'll be back with you on